Today, we're diving into a big question on everyone's mind. Is the US economy heading into a recession? We'll break down what's happening with the American economy, explore how President Trump's policies might be shaping this trajectory, and look at some key data points, like GDP Now and consumer confidence, that are raising eyebrows. Plus, we'll talk about what all this could mean for the crypto markets, especially with trade wars heating up and financial markets feeling the pressure. Buckle up. This is going to be a deep dive. Let's start with the big picture. There's a lot of chatter right now about whether the US is on the brink of a recession. Markets are jittery, and for good reason. Economic indicators are sending mixed signals. On one hand, we've got the Atlanta Fed's GDP Now model, which is flashing some warning signs. On the other, inflation's cooling off, which could give the Federal Reserve room to maneuver. Meanwhile, Trump's aggressive trade policies, think 25% tariffs on Canada and Mexico, plus ongoing tit-for-tat with China, are stirring the pot. Add in his push for a federal crypto reserve, and it's no wonder the markets, especially crypto, are all over the place. So, what's driving this recession talk? Let's look at the data. First up, the GDP Now forecast. This is a real-time estimate of economic growth based on monthly data like manufacturing, retail sales, and more. Back on February 28th, it was projecting a 1.5% growth rate for Q1 2025. By March 3rd, that dropped to 2.8%. Negative growth for 2 quarters? That's the textbook definition of a recession. Now, GDP Now isn't perfect. It's a simulation, not the final word, but when you pair it with other signals, it's hard to ignore. Some analysts say these numbers got skewed because importers rushed shipments to beat the new tariffs. Fair point. But even so, it's a red flag. Next, let's talk consumer confidence. The University of Michigan's Consumer Sentiment Index hit 64.5 in February, down from 66.5 in July last year. That's a sharp drop. When people feel uncertain about their jobs, their bills, or the future, they stop spending. Less spending means businesses slow down, and that ripples through the economy. Historically, low consumer confidence has lined up with crypto dips too. Remember last year's price action, when sentiment tanked, so did Bitcoin and the altcoins. Could we be seeing the same setup now? Then there's inflation. Here's a bright spot. Daily measurements show it's fallen to 1.42% as of early March, way down from 3% in mid-January. That's good news, right? Lower inflation could mean the Fed eases up on its tight monetary policy, maybe even cuts rates. But here's the catch. Such a fast drop might signal economic activity is stalling. If businesses aren't hiring or investing and consumers aren't buying, that's not exactly a thriving economy. It's a double-edged sword. Now, let's zoom out and ask, what's Trump up to? His policies are at the heart of this debate. Since his first term in 2017, he's been all about tax cuts, deregulation, and tariffs. Back then, it worked pretty well. The stock market soared, unemployment hit record lows, and crypto saw some epic rallies. But there was a downside. The national debt ballooned, and income inequality widened. Fast forward to today, and the US. Debt to GDP ratio is over 130%, up from 104% when he first took office. That's a heavy burden, and it's shaping his playbook this time around. Take his trade wars, for example. Trump just slapped 25% tariffs on Canada and Mexico, effective today, March 4th, 2025. He's also threatening to hike tariffs on China, again, after they retaliated with duties on US agricultural goods. Europe's in the mix too, with verbals, sparring over trade barriers. Trump says this is about bringing manufacturing back to America. He wants the US to be a production powerhouse again, not just a service-driven economy racking up trade deficits. Fair enough, Middle America, his voter base, got hammered when factories moved overseas. But here's the rub. These tariffs are spooking global markets. Canada's already promising retaliation. China's mulling more countermeasures. It's a high-stakes game of chicken, and the financial markets hate the uncertainty. Speaking of uncertainty, let's talk crypto. The markets have been a roller coaster lately. We saw steep drops earlier this year, then a bounce. After Trump floated the idea of a federal crypto reserve. Think Bitcoin as a national asset. But that rally fizzled, and prices slid again. Why? Macro factors like these trade wars and recession fears are drowning out the hype. Crypto's hypersensitive to risk-off sentiment. When stocks dip, like Nvidia's 5% drop yesterday, or the S&P's pullback from its highs, crypto tends to overreact. It's not a pretty picture. So, what's Trump's endgame? Beyond tariffs, he's pushing a mix of spending cuts and stimulus. Check this out. He's got Elon Musk heading up a new department of government efficiency. Their mission? Slash the federal workforce and trim the budget deficit. Word on the street, like reports out of Washington, says housing prices and rents are already dropping there as public sector jobs get axed. Meanwhile, Trump's trying to dial back military spending. He's pressuring Ukraine and Israel to wrap up their conflicts, partly to free up cash. He even tossed out a wild idea about turning Gaza into a tourist hub. Classic Trump. But the real goal seems to be making the debt more manageable. Why the debt obsession? Look at the bond market. US 10-year Treasury yields are hovering above 4%. That's pricey for new borrowing. If Trump wants to keep issuing debt, and he will, with tax cuts and infrastructure plans in the pipeline, he needs lower rates. That's why he's leaning on austerity measures while still promising big investments. It's a tightrope walk. Boost the economy without tanking it. Here's where it gets tricky. Markets don't like chaos. Every day, Trump's out there with a new headline. Tariffs today, a mega investment announcement tomorrow. It's relentless. Consumers are rattled, businesses are hesitant, and investors are stuck in limbo. Will these trade talks settle down? Nobody knows. Until they do, expect more volatility. Let's tie this back to crypto. If the US does slip into a recession, say GDP contracts again in Q2, what happens? Step 1. Bad news. Risk assets like Bitcoin and Ethereum would likely tank harder. We've seen it before. Economic slowdowns hit speculative markets first. But step 2 could flip the script. If the Fed steps in with rate cuts or pauses its balance sheet shrinkage, that's rocket fuel for crypto. Lower rates mean cheaper money, and investors start hunting for yield. Altcoins especially could catch a bid. We're in a wait-and-see mode, though. This week's jobs report will be huge. Keep an eye on unemployment. If it ticks up, those recession fears will grow. The Fed's March meeting is another wild card. Will they signal a pivot? If they do, markets might stabilize. If not, brace for more turbulence. So, where does this leave us? The US economy is at a crossroads. Trump's policies, love them or hate them, are shaking things up. GDP Now's pointing down, consumer confidence is shaky, and trade wars are keeping everyone on edge. Crypto's caught in the crossfire, swinging between fear and greed. My take? Stay cautious. The next few months are a coin toss, recession or recovery. It's too early to call. That's all for today, folks. What do you think? Will Trump's gambles pay off? Or are we headed for a downturn? Drop your thoughts in the comments. Hit that like button if you found this helpful, and subscribe for more breakdowns like this. Thanks for watching. See you next time.